Hello and welcome to ActivTrade's biggest market movers. The British people have voted to leave the European Union, and really we've seen some of the most incredible moves in the currency market overnight. Some 2,000 pip moves in some currencies, and today I'd like to focus on the British pound against the US dollar as traders now step into the market and try to price the political and also the economic consequences of the Brexit. And I think today is going to be especially volatile, as you're going to be seeing people speaking about the potential consequences. Politicians will certainly be coming out speaking. David Cameron's future is going to be in question as the leader of the Conservative Party, and in general I think the European Union is also going to be worried about the consequences of the Brexit. So today I'd like to have a quick recap of what's gone on overnight, and I'd also try to identify some technical levels to the downside, as the market has really got this one wrong, as it dramatically underpriced the risks of a Brexit. And the days leading up to the event, it was acting as if a Remain vote was on the cards, and of course they've got that wrong. So in front of me I've got a chart, a 1 hour chart of the pound against the US dollar, and we can see in the Asian session, as the market was still quite complacent, it's moved up as high as 150 as we broke from the crucial 147.50 level, and from there it's stepped up its buying and it peaked at 150 as the votes were coming out regionally in the UK. And it became apparent that the vote was a lot closer than thought. The sterling started to reprice the risks in, and it sat around the 140 level. And as the votes came in and it was apparent that the leave vote were ahead, you've now seen sterling tumble all the way down to the 132 level. With the markets moving as fast as they are, it's quite hard to see exactly where this is going to go. So I think the best thing that we can do is have a look at a monthly chart here of the pound against the US dollar, and we can clearly see here I've got a wedge pattern that we've broken out of, and the size of the wedge from 140 to the 158 is 1800 pips. So if you can imagine 140 and you subtract 1800 pips, the size of the wedge, we could potentially be looking at a 122 level. At the moment we've made a double bottom, but we've made a lower double bottom, so we've broken the 135, which was the last low set in the financial crisis. So we've pierced that. So we're now heading towards quite uncharted territory, towards I think 1985 was the lowest level that sterling is sat at, and that's where we're currently sitting. So I think at the moment we can potentially see the psychological 130 level tested. If we start to break that, then we can certainly be looking again at the 125 and the 120 levels. I think it's worth noting that the all-time low on sterling is 105. I don't foresee it going as low as that, but as uncertainty comes in, you can now expect to see a range possibly between 135 and 125. And I think as we move into next week, it's going to be fascinating to see what happens in the currency market as a whole. Thank you very much. This has been ActivTrade's biggest market movers.